I went out and did some training at the range yesterday. And that video, I know a lot of people out there like to watch the training videos. I've got maybe a 3-minute video up on Facebook right now. So you can go to Jeremiah Babe, check out the training video if you're into that. Again, there's always people hitting me up in the comments about training videos. And so if you want to watch that, it's about 3 minutes long. Go to my Facebook, Jeremiah Babe, and check that out. It's Thursday, September 19th, 2019. Markets flat today. Dow Jones down 53 points. Bonds were falling. As I sit here making this video this afternoon, as markets have closed, the 2-year and 10-year are only 4 basis points apart. Expect to see another inverted yield curve coming soon. New York Fed injecting another $75 billion into the repo market today. Yet people are telling you, your friends, your family members, people on TV, the business analysts, they're all telling you everything is okay. I'm here to tell you right now, we have more indications as I'm reading to you today that things are not okay. In fact, they're much worse than most people can even imagine, and they're about to get much worse. I'm going to give you a reason, one solid reason why they're going to get much worse, because Jerome Powell is warning you that they're going to get much worse. Yesterday, Jerome Powell confirmed that QE4 is coming, just not today. Here's what Jerome Powell said yesterday. It is certainly possible that we'll need to resume the organic growth of the balance sheet sooner than we thought. Doesn't sound like he has as much confidence in this market than what he had a couple weeks ago. Moments after Powell confirmed that QE4 is indeed on its way, around 2:50 p.m. Eastern Time, stocks spiked and the dollar slumped. Expect more problems in this repo market, expect more problems in the stock market. They are losing control. You know, these markets wanted more than 25 basis points, okay? They wanted more than a 1/4 point cut yesterday. I was shocked. Many people in the comments down below predicted a 1/2 point cut, and it didn't happen. I stuck with a 1/4 point cut. I was right. Many people agreed with that and believed in the same thing. But these markets wanted at least a 1/2 point cut, if not a full cut, a full 1 point cut. A 1/4 point cut did nothing for these markets. The medicine is wearing off. A 1/4 point cut now is like giving these markets an aspirin. They need a 1/2 point or a 1 point cut because they need that adrenaline to get these markets driving again. 1/4 point cuts are meaningless now. The Fed may have to get more aggressive. We may see that 1/2 point cut coming next. We may see a 1 point cut coming soon. I believe in 2020, we will be at 0% interest rates. We will be at 0 in 2020. And the possibility of America seeing negative rates is becoming more and more real every day. Let's talk a little bit more about some more warning signs. Some major concerns here. New York Fed injected $75 billion into the market for overnight repurchase agreements known as repos. The Fed intervened in the market on Tuesday and Wednesday after interest rates spiked higher at the start of the week. Tuesday, they injected $53 billion of cash. Wednesday, they injected $75 billion of cash. And today, Thursday, they injected another $75 billion of cash. Yet there's no problems, right? No problems. And many people could say this is already quantitative easing. This has already begun. So just imagine where we'd be right now if the Fed was not injecting multi-billions of dollars into the repo market, if the Fed wasn't cutting interest rates. Why are we cutting rates if the economy is booming? Nobody seems to want to ever answer that. Why are we not raising rates? The saver is getting destroyed here. The Fed rate cut hurts Americans, especially the middle class. The middle class is being decimated, it's being gutted, and cutting rates is not helping the middle class. And anybody with a substantial amount of money sitting in a bank is getting absolutely destroyed. I mean, you're just earning nothing. Your money is just getting eaten up by inflation every month. But They are forcing people, especially the middle class, to gamble in these markets because they are earning nothing in the bank. They're losing money, leaving your money sitting in a bank. You are losing money every month. So people are gambling. They're going to the poker table. They're going to the roulette wheel that we call the stock market, and they are taking enormous risk. So we'll see how much worse this gets. What's going to happen when we're at zero? What happens when we're at negative? Are you going to pay your bank to lend them to your money? Will you pay your bank to lend your money to that bank? Think about that. So if you put $10,000 in a bank account, you're lending the bank your money, and you're going to be paying them so that you can lend your money to them. Think about that. How many people are willing to do that? This is why right now we need to be conditioning ourselves to be less reliant on the banking system. Keep the bare minimum in your bank accounts, enough to pay the bills. But find other alternatives if you're storing lots of cash. Remember, your money is not as safe as you think it is in a bank. If there was ever a bail-in, another bailout, if these banks get into massive trouble, we see a bank run. There's a multitude of things that can happen. And everybody thinks that their money is insured, but there's not enough FDIC money to insure every dollar in every bank account here in America. So think about that. Your money is not as safe as you think in the banks. And the banks and the bankers are the biggest crooks in the world. And at some point, you're going to be paying them to hold your money. When we start looking at all these warning signs, when we look at indicators, they tell you the direction that things are going. And if we're talking about the economy here, we start looking at these indicators, they're clearly telling us that things aren't getting better, they're getting worse. This is on BuzzFeed News. It's not just millennials. Gen Z is dealing with a lot of debt now. This is an interesting article. Millennials carry an average of $27.9 thousand in debt, not including mortgages. Gen Z, the oldest of whom are 22 years old, have an average of $14.7 thousand of debt. I couldn't even imagine being 21 years old with almost $15,000 of debt. These people don't stand a chance. Millennials' main source of debt is credit cards. What a surprise. Gen Z's main source of debt is student loan debt. 40% of millennials said the top reason they carried a credit card balance was daily expenses such as groceries, childcare, and utilities. 20% said it was medical bills and car repairs. Just think about this. If you're, 20 years old or, you're 28 years old and you're holding $30,000 of debt with interest. Many of these credit cards that these millennials have, they're running 21, 22, 23% interest with massive amounts of debt on these cards, multiple credit cards, and the interest keeps accumulating on a daily basis. These people are never going to get out of this debt. And then when you look at wages, these people, they're just doomed. And this is really looks bad for the future of America, because these are people who are going to, that would be home buyers, auto buyers. These are consumers, and they're consuming so much already, but they're consuming it on borrowed money. So where is Gen Z? Where are the millennials 10 years from now? Are they just deeper into debt? What happens to these people, and what kind of ramifications is this going to have on the future of America and the economy here in America? It's very concerning. This was an article that really should concern every one of you. Zero Hedge today, U.S. housing finance worse off today than in 2008. I'm going to paraphrase through this article a little bit here for you, because it's very, very important. And it just shows that we're committing the same behavior that got us into the 2008 crisis. Freddie Mac and Fannie Mae control about $5 trillion in mortgage-backed securities. Federal Housing Finance Agency Director Mark Calabria said this: "When I look at a $3 trillion institution leveraged 1,000 to 1, it keeps me up at night." And it should keep every one of you up at night also. This is a ticking time bomb. Both Fannie and Freddie are allowed to keep $6 billion in capital, $3 billion each, but they own or guarantee $5 trillion in mortgage-backed securities. Now get this, this is where it gets really dicey. If 0.1% of Fannie and Freddie's mortgages go bad, it would wipe them out and they would have no capital left. Without these two entities repackaging and guaranteeing mortgages, the sales of homes would be decimated. Again, this should keep every one of you up at night thinking about this happening right now. This is worse than 2008. Remember, the bubbles are much more inflated than they were in the 2008 crisis. We're now, seeing mortgage rates slammed so that they'll get people to get into these housing markets and buy. So they're pushing mortgage rates down as an incentive to get people in. I'm reading that new home builders in Canada are giving away free Teslas to come buy their homes. We're seeing subprime loans back into the U.S. housing market here. And the housing bubble continues to inflate, getting bigger and bigger, and it's going to be worse than the one that you saw in 2008. And the housing bubble is only one bubble, and it is the one bubble that is going to do an enormous amount of damage to the U.S. economy. We also have a bond bubble. We have a stock market bubble that are also massive, that will do huge amounts of damage to the U.S. economy. These three bubbles are probably the three scariest of them all. But there are bubbles in many of the other asset classes that are overinflated, that are going to do a lot of damage also. But when I look at the bond bubble, the stock market bubble, and the housing bubble, these three are going to probably do the most damage of them all. So be aware. And, if you're looking at real estate right now, enter with caution. I think we are getting at the very height of this bubble. Could it go another year? Yes, of course. Could it go another 2 years? I think that's really pushing it. But if you bought a house in the next 6 months and the market crashed a year, you are going to be in a world of hurt. You're going to be upside down. I think right now is a time to be very, very conservative and really follow what is happening in these markets. Watch these bubbles closely. You do not want to be a casualty of this disaster. When we look at what's happening at the repo market and this massive injection of cash by the Fed, quite possibly already the beginning of QE4, it is a major indication that they are losing control. When we look at the plunge in bond yields today, when we look at the 2-year and 10-year getting very, very close to inverting yet again, when we look at another rate cut because things are doing so well, we have to cut rates, yet people never ever question, why are we not raising rates? Why are we cutting rates in such a good economy? When the Fed is already telling you that QE4 is coming, these are all bellwethers to what is coming. Another one, this China trade war, these negotiations with China. The administration came out today, said that they're ready to raise 50 to 100% on the tariffs if we do not get an agreement. So again, more talk, more threats. We are farther apart than when we began, okay? The tariffs are higher on both sides than when we began this trade war. And I believe that this trade war is not going to end anytime soon. It is going to have ramifications on the economy and on the markets, not to the extent of other things such as the debt. I think we put too much leverage into the trade talks in regards to the markets and the economy. Yes, it does have an effect, but not to the extent of the real enemy, which is debt. The debt is what is going to collapse the U.S. economy. It is what is going to collapse the stock market. It is going to be debt, not China, not trade negotiations, not a trade war. It is going to be debt. Yeah. Yes, Fannie Mae, Freddie Mac leveraged 1,000 to 1. It is a ticking time bomb without a doubt. But not only that, we have major overinflated bubbles such as the housing bubble, of course, the bond bubble, the stock market bubble, and we have a lot of other bubbles in literally every asset class that are overinflated. But the three biggest ones are going to be the bond bubble, it's going to be the stock market bubble, and it's going to be the housing market bubble. But it's going to set off other bubbles smaller bubbles that are going to have also major cataclysmic effects on this economy and on the stock market. And I truly believe you must be preparing as much as you can, because I think time is running out. That doesn't mean that it's going to happen tomorrow. Doesn't mean it's going to happen next week. It could happen 2 years from now. It could happen 3 years from now. It could happen 3 weeks from now. Nobody knows. But there's no way you should be taking that chance. Now is the time to be preparing. You need to be walking closer to God. You need to be getting in better physical shape. You need to continue topping off all your preps: water, food, gear, security. And of course, I truly believe that you got to have precious metals. I don't think you can go into this not believing that you have to have some precious metals. You have to. People will say, well, you got to have beans, you got to have food, and you better have water, because gold and silver is going to be worthless. You'll be throwing it into the streets. It's the end times. First off, nobody says it's the end times. No man knows the end times. And I certainly don't believe this is the end times. I believe that America is going to be tested. I believe America is going to be rocked. But by no means do I believe this is going to be the end times. I believe this is an awakening. I believe God's people, this is the time God's people are going to wake up. This is the time America wakes up and we get our country back. But doing so, we better be prepared. And that means you better have your gear, you better have security, you better have your preps, and you better have precious metals. These people who think that it's just about having a can of beans and bottle of water and that's going to get you through it. First off, people are going to come to your house, they're going to steal your can of beans, they're going to steal your water, okay, if you don't have security, okay? Now, when the dust settles and we get back to monetary balance, we get back to a monetary system, do you want to be holding a can of beans, or do you want to have an ounce of silver? Think about that. Do you need a bottle of water, or do you need an ounce of silver or an ounce of gold? There's been no time in history where a collapse has lasted forever, okay? We're going to get back. We're going to get back up and running. We may have a new currency. We may have a new dollar. It may be backed by gold. It may be backed by silver. It may be backed by a combination. We may have a crypto backed by gold. There's an array of things that could happen, but you don't want to be one-dimensional. Oh, I'm going to have some water, I'm going to have some beans, and I'm going to last. No, because somebody's coming to your house, they're going to take your beans, they're going to take your water, they may take your kids, they may take your wife, so you better have security. Look, we all know the number one asset is walking close to God, and right under that is security, okay, to protect that water, to protect those beans, protect your family, to protect that gold, protect that silver. But I don't see how anybody believing that we're going into a collapse doesn't believe that you should have some gold or silver. It's not all about beans and water, okay? Because gold and silver will continue to buy food even in a depression, as history has taught us in every country, every part of the world. Gold and silver has always had value, even in the worst of times, even in financial collapses, even in currency collapses, even in depressions. Gold and silver still bought goods and services. Now, what happens when we come out of a collapse and the dust settles? You want to be ahead of the game. You want to be holding real money. This is where I think people really succeed. This is where I think people really survive and people really prosper, is after the collapse, if they're holding real money like gold and silver. Look, a can of beans and a bottle of water isn't going to be worth much after the collapse, okay? Because the water's back on, the food's back in the stores. What does everybody want? They're going to want real money, gold and silver. And so it may not be as important during the collapse, but it's super important coming out of the collapse, and it still has importance during the collapse. Things will be on sale during a collapse. Do you think paper currencies are going to have buying power, or do you think real hard assets like gold and silver are going to have buying power? Do you think that 100-acre farm is going to want fiat paper currency, or do you think that bank that owns that farm is going to want the real money, real gold, real silver? That's how I see it. People have commented down below who I recommend. I recommend SD Bullion. That's where I buy all my gold, all my silver. Link down below, SD Bullion. They've been phenomenal. Everybody that I know that has ordered there has had fantastic service. And I got turned on to SD Bullion by the people down below in the comments. So I like them so much. That's all I've been using is SD Bullion. I don't work for SD Bullion. I don't sell precious metals. I don't own a gold mine or a silver mine, just to be clear. I don't work for anybody. I'm an independent contractor in the security field. So just to set the record straight, I don't work for any precious metals company, and I don't own a gold mine like many people think. So again, the trolls out there who don't own gold or silver, who don't have security, who don't have any food or water, they're the ones that will continue to tell you that you shouldn't either. But I'm telling you, you should. Gold and silver have never been worth zero since the beginning of time. And the amazing thing about gold and silver is they're mentioned in the Bible hundreds of times, and they're even in heaven. So for the good people out there, when you go to heaven, you're going to see silver up there. You're going to see gold up there too. You're going to be walking on streets of gold in heaven. So these people out there that are so anti-precious metals, it's God's money. It's always been God's money, and it always will be God's money. He put it here in the beginning of time, and it's here after time. It'll be waiting for you in heaven. God loves gold. God loves silver, and God is going to bless his people with gold and silver. So wake up and make sure you're holding some gold and some silver. It's okay. God made it, and God is allowing his people to have it, and he's going to bless his people with it. So protect yourself with it right now. Protect yourself with hard assets, with the real metals, gold and silver, not paper. Paper is not going to be here. It's not going to stand the test of time, and it's certainly not going to stand up against this collapse. You need real metal. You need armor. It's gold and silver. So I want to thank everybody for watching. Please comment down below. It's so enlightening reading the comments. So many people, so many comments, so many enlightened, intelligent people thinking outside of the box. We learn so much from all your comments. So continue to comment down below. It's really enlightening, and so many people, including myself, really love those comments. So continue with the comments. Please, as I've said earlier, share this video, get it out, put it on your Facebook, put it on social media, share it. We continue to wake people up on a daily basis, and we will not stop. So get the message out. Thanks for watching. I'll see you very soon.